Good day, traders. How's everybody doing this afternoon? Type a Y in the chat box that you guys can hear my voice and see the screen. That would be greatly appreciated. Fantastic. Fantastic. How many of you guys are excited? I don't know about you, but I've never been more excited for a webinar in a very, very long time. Maybe I think it's because we've been in a private Zoom for the last couple weeks trading this strategy together. And wow, like we've just the results and the opportunity that we've extracted has been next to unprecedented. I'm going to open up the chat box here for a second just so that everybody can type. I don't normally do this in a webinar. Very rarely do we do this. If anybody here slanders the chat, we'll kick you out. But all jokes aside, I want to share a few things with everybody. And can everybody here type? Can everybody do me a favor and type in the chat box here for a second? Just put to everybody. You can see right before the chat box, you can see where it says you can choose to panelists or host or everyone. Just right down at the bottom, just select everyone because nobody can see your text. Nobody can see the chat box unless you choose everyone. So on the chat, just make sure you select everyone. Can everybody see that? Perfect. That way, when you put a comment and when you type, everybody sees it. Great. Now, the reason I'm doing this is not just a normal product launch. This is not some webinar that we normally do like all of the other tools. This is, well, the future of pretty much everybody's new destiny, I'd like to say, without being too cliche. Um, we took a different approach, and I think you're going to love what we've done here, and we're going to talk about that in all of the details today. But I think it goes without saying that I've been in a private room for a very, very long time, and we've been trading this with a lot of traders, and I want everybody that's been with us to be able to comment. Please note that we are recording this, and we ultimately are going to send that recording out to everybody after the presentation. Please note that if you post anything in the chat box related to a prop firm or accounts or anything that is not related to this presentation, we will remove you. So the fact that I've opened up the chat box for everyone to talk, do not post anything in here about prop firms or the accounts or the dashboards or because that's not what we're here to talk about, right? We're here to talk about divergence. We're here to talk about trading systems. Anything outside of that is not for this presentation. Okay, guys? Everybody give me a why that makes sense because normally we don't leave the chat box open for that reason. It gets distracting. Okay, great. So what we're going to do today, guys, is we are going to talk about automated divergence. And this is a product launch inside of the marketplace, but this isn't some regular indicator. This isn't something that, we just decided to build. We literally have been trading this strategically in private groups with a lot of traders in multiple occasions because I've been doing this on the sides for years. I've been a divergence trader for a very, very long time. And a lot of it has to do with how I learned about what I did. Like, there's a little bit of a backstory here, and I think a lot of you guys will relate with it. I think a lot of you guys will appreciate it because outside of being a CEO of a company, I'm also a trader just like every one of you guys. Like, I've been in the trenches for years, just like you guys. So I understand the struggle. I understand the journey. I understand the difficulty. And when I find success or when I feel the accomplishment of winning and making a lot of money, I get excited. How many of you guys get excited when you take a lot of wins and you make a lot of money in the market? Type a yes if that's you guys. How many of you guys love making money and winning? Right. And how many of you guys right now are struggling? Be honest with me. How many of you guys are struggling? Type a yes if you're struggling. It's honest. Like I don't care if it's shameful, if you feel like, oh my God, I don't want people to know, but like, how many of you guys are still not making a whack load of money and you guys feel like you're still having a hard time? A lot of people. You see that? Okay. So if I have a solution Okay, if I have a solution and I can show you the success and I can show you the strategy, I can show you how to trade it, I can show you how to do exactly what I'm doing with success, would you guys be happy about that? Would you guys be excited about that? If I could change you from being a struggling trader to a very profitable trader or a successful trader and a winning trader, how many of you guys would be okay with that? Type a yes if that sounds good. Sounds great? Okay. Now I'm going to go one more step further. How many of you guys have your walls up? How many of you guys are nervous, skeptical, sick of buying strategies or indicators that you're not winning with? Maybe you've got the yeah buts or the case of the what ifs, right? Right? Well, Frank, that's the exact reason why we took a different approach. Frank's saying very valid. He's like, yeah, but you say that about a lot of products. Well, a lot of products we trade, but the cool part is that we wanted to do something different, Frank, so that we can hit exactly that comment. How many of you guys were with me a couple weeks ago in the trifecta boot camp? How many of you guys were with me in the divergence boot camp where I traded this manually? Just type a yes if you guys were in that group. Yes? Okay, for those of you, a lot of you are posting in here, but you're not posting to everybody. So please do me a favor, go down to the chat box, change to everyone. Make sure that when you type in the chat box, everybody can see that it's posting to everyone. Okay. Okay. Now, let's redo that. So everybody that was in the trifecta boot camp watched me trade live. How many of you guys watched me trade live and seen me do that? Yes? Great. How many of you guys just spent the last 3 days with me and watched me trade live divergence? Type yes. Yes? All right. Great. Now, one last question. Were you guys impressed and did I make a lot of money trading divergence? Yes or no? Exactly. So rather than just sell an indicator and say we did something awesome, right? I wanted to take a different approach so that I can remove the skepticism, remove the yeah buts and the what ifs, and just really, really show you something that I've developed as a trader. I've developed a different way of trading divergence. I've developed a proprietary way of trading divergence. When I say proprietary, I actually mean proprietary because I built a different way of doing this using a combination of different bar types, different divergence, different indicators. And I've built a killer ass strategy that makes I personally have never traded so well in my life. Like I have done so good trading this system that I built boot camps around it so that I could show traders that like this is actually possible. Like really, really possible. Now let me ask you one last question. How many of you guys would like to trade a strategy that could get you over 75% win rates? Let me write this down, okay? 75% win rate with a 2-to-1 risk reward or better. How many of you guys would like a 75% win rate with a 2-to-1 RR or better? That's insane. That's insane. Okay, now let me explain something. I've tried to do this with every strategy that I've ever built. I've been a system developer for a very, very long time. And this is the only strategy that I've ever seen in my entire life that I've been able to accomplish those types of metrics, just due to the fact of how I've built the entry patterns and how I've built the execution. Uh, it is hands down the only strategy that I've ever seen in my tenure that been able to do this. I think that if you guys learn this, you probably won't need to buy anything ever again. I mean, if you really want to master something, this is something that I truly encourage people to pay really close attention. Okay. How many of you guys have heard the story that indicators are lagging? Indicators are not lagging with what we've built for this. I can tell you right now that the divergence tool set that we've built, there's a way in which we trade divergence that is putting divergence as leading. It is an oscillator that allows us to lead price, and it has everything to do with how we enter the trades. And so what we're going to do today is we're going to show you that, and we're going to basically open up and basically show you how to do this. Okay. So if you have questions, put it in the chat box. If you have requirements or comments, just put it in the chat box and I'll do my best to help. But let's get started. This is super, super exciting. Okay. So disclaimer, we're in the trading industry. It's risky as hell. Most traders lose all their money before they make money. I can't promise you anything but my time, resources, education, and software. If you do place risk capital, there's a chance you'll lose all of it. And ultimately, past performance never guarantees future results. So do me a favor and type a Y in the chat box that you understand the risks and you agree to the disclaimer. Frank, no, it's different. The algorithm is different than the divergence in NinjaTrader. It's a little bit similar. There are some differences, different nuances in how we code the signals. Yeah. Great. Thank you, guys. So this was yesterday. So this was ultimately my trades I took yesterday in the boot camp, literally yesterday. And this is when everybody was watching me. How many of you guys watched me trade divergence yesterday and just thought it was just awesome? Yes. I mean, to me, we just crushed it. We just killed it. Like it was just great. Well, let me show you what I did today. Did the exact same thing. I mean, that was me today. Did the exact same thing. We just crushed it. We just absolutely crushed the market. And I mean, it's just so fun when you're doing big things. I mean, it's who doesn't want to make a lot of money? Um, why do I lead with this? Because I truly believe seeing is believing. I've been in a lot of presentations. I buy education. I buy training in other industries. I buy coaching. I have mentors in other areas of my life, and um, I'm always skeptical. I don't want to spend a bunch of money on stuff that I don't think I can get my return on investment back, right? So this is an indicator, and this is a signal generator. It does everything for you but execute the trades. Now, just a rule of thumb is that we do have it in our plans to build an algo for this, but it's not done and it's not ready and it's coming in the future. But this is not an algo. This is an indicator. Okay. So what we're going to do is we're going to talk today about how the divergence works. We're going to talk about what you need to learn about divergence and why it's really important to understand the differences between the different types of divergences. On here, you're seeing 4 different types of divergences. You may not know this, but I promise you that you're going to have 2 different types of buy divergences and 2 different types of sell divergences. 2 of them are lagging, 2 of them are leading, and we're going to talk about the difference. And the goal here is to be able to show you why it matters and what the difference is. Okay. Now, the agenda is very simple. I'm going to tell you straight up why everybody has a very hard time with divergence. A lot of people struggle with divergence, and there's a reason for it. 90% of everyone I've met that's trading divergence is trading regular divergence. Okay. Regular divergence is when you are a counter trend trader. What is regular divergence? Regular divergence is when the markets are going up and basically we're trying to sell the market with the anticipation that it's going to go down. The reason this is called regular divergence is because we're using the oscillator to dictate, helping us identify turning points in the market. Okay. The problem with regular divergence is that you're always fighting the market. And that's why a lot of traders don't trade divergence, right? Is because technically divergence was never designed for that. The retail public just did that. People think that that's the way that divergence is supposed to be traded. And it could not be further from the truth. It is so different and it is so back-ass crazy that it is so wrong that I built an ebook. I literally built an ebook. I wrote this. This is my ebook. I built it with AI and I structured this. And I am going to give everybody this ebook. I built it. It is my own work. I used AI to format it, but the purpose of divergence is not to trade reversals. Divergence should always be used in directional context. And if you trade divergence in directional context, you will have a completely different scenario with divergence. So type a yes in the chat box that you would love to have my private ebook on divergence. It's a trading system. There's a lot in here. We're going to go through it. We're going to talk about it. There's a ton. I'm going to give it to everybody here who uses the software because it's personally written by me. It's got everything that you could possibly want to know about everything. And it took me weeks to build that. It's not some little teeny project that AI just spit me out some text. And so I'm going to give you that ebook here. So don't worry, we'll take care of it. Now, what's cool about the divergence software is that we built it with momentum and delta. So inside of the divergence algo, what we did was we coded it for momentum oscillators. And then we also added order flow delta. So what's really cool is that the divergence software, you can choose, do you want the divergence to be off an RSI? Do you want it to be off of like a CCI, or do you want it to be off cumulative delta? We can do cumulative delta as well. So we've got the difference between momentum divergence and order flow divergence. Okay. The key here is understanding potential divergence versus confirmed. Hmm. Hmm. How many of you guys have always heard that you need to anticipate the hard right edge? How many of you guys have heard people say you got to get in tune with the market. You got to feel it. You got to anticipate the market. Okay. Well, the hardest thing to do is to have an understanding of what do you expect to happen next with a high degree of accuracy. Well, potential divergence is the closest thing that I've ever been able to see that gives me the foundation of, okay, this is what's about to happen. I expect this to happen with a very high degree of accuracy. And I'm here to share with you that we can use potential divergence as a way to get into the trades before the divergence confirms itself. And this is why I trade body break methods. We're going to teach you what the body break method is today. But the cool part is that you're always in before the divergence actually confirms itself. And this is the edge. This is how you get huge R multiple trades. This is how you get in with really kick-ass setups. And it can only be done on Renko bars. So let's write this down. This is designed to be done on Renko bars. Okay? How many of you guys in here are using Renko bars or have used Renko bars in the past? You understand it? Perfect. If you're not, don't worry. They're free. We can give them to you. It's super easy, etc. Okay? Now, everything to me is about seeing and believing. I am not here to give you any hocus pocus. I don't believe in all that shit. I'm a straight shooter. I like to trade. I like to show that I can trade. I like to do it in front of large audiences so everybody can validate what I'm talking about. And you could use range bars, Al, but it's not going to give you the same edge. Yeah, it's not going to give you the same edge. Yeah. Now, let's get into it. 1 second here. My dog here is just at the door, and we're going to get him to stay here so I can do the presentation. Please calm down. Anybody here have dogs or cats or maybe iguanas or lizards or whatever you got? Sometimes you get a pet and they want to do their own thing and they take your distraction. Give me 1 second, guys. I'm just going to let him out of the door here, and that way he's not barking at the door. Bear with me, guys. Sorry. Yeah. Lisa says, "Yeah, I have a husband." Amara says, "I have a wife." Okay, guys. Well, we won't show them the chat. Okay, so we're going to just spend the whole time just going over the signals and the trades. What I've done is I've created a divergence roadmap. So this is in the ebook. You'll get access to this. The point here is to understand that when we get the signal for divergence, okay, even though these say reversals, I'm only going to trade them in a trend. So we are going to identify divergences in trends. Everything that we are going to do, every divergence signal that we take is going to be with direction. We will never trade divergence against direction. Why? because divergence was never meant to go against the market. As much as it may be used that way, it's not good. It's why everybody has big stop outs. That's why everybody has stupid size risk. I trade with very tight stops. Very, very, very tight stops. And I'm normally against very tight stops. You've probably heard me in webinars say, oh, you shouldn't have a tight stop. You need to let them. It depends on the system. It depends on the context of the signal. And what we're going to do today is we're going to talk about divergence, why momentum leads price. Okay. And then the four core on divergence signals. Okay. So everybody, don't worry. You'll get a copy of this. You don't have to worry about typing it out and taking notes. You'll get access to this and it'll be good for you guys to see it. Now, most traders fail with divergence because they're late, and drawing divergence by the time this signal happens. Okay. By the time this signal happens on the chart and you've had a chance to draw the line and identify the divergence, market's here. You've already missed the trade. And what I'm going to tell you right now is that most traders are entering divergence late. We built this software on other platforms, and the problem is that we have the other versions that are lagging, and that you don't really get the market structure to plot. So like it's not really as fine tuned as this. We've really done a better job on the Tickblaze platform with creating the divergence in a different way. Different programmers, more experience, more edge in the strategy. And I'm really here to say that Tickblaze's version of divergence is the most responsive software I've ever seen with divergence. And I'm blessed because the coder that we have, he's a divergence trader, at least to some degree. And he's built a version of this that really just improved the engine behind the software, which helps us get into the software, the strategy signals early. And it also helps us to identify divergence in a more accurate context. Why is that important? Better signals, more profitability. Most divergences lag. Ours does not. And there's a big difference in the lag. Normally, divergences would not print here. Like normally in most indicators on the back painting, the bars would need to get to about right here before the zigzag plots. Okay. And then the divergence confirms itself. And what happens is when you go to backtest, your eye will say, oh, wow, the divergence happened. But in realistic, when you trade it live, the market's here before that divergence kicks in. Not with Tickblaze. Divergence kicks in right here. Right there when we get in with this software. And that is the reason why we crush it with super tight stops and big targets. Literally, that's the size of my stop loss, like little teeny stop. Why? Because if it ain't going here, it ain't going. And I've never traded so well. I think it's just a gift. I think 10,000 punches, right? You have 10,000 hours behind the chart. I'm here to tell you that you do not need to have big stop losses. In fact, this morning today, when we traded, I had back-to-back stop losses right out the gates. I said, hey, traders, don't worry. We're just going to get back in and keep trading. And as soon as I did that, bing, bang, boom, one trade took out 3 losses, right? Literally, you can have huge R multiples. And the reason is because we're not in the market for a very long period of time. How many of you guys have heard me say in the other webinars, time in the market equals bad, right? How many of you guys have heard me say that time in the market is a bad thing? And how many of you guys have heard me say before that we don't want to hold on for big, big, long trades because it's very hard for us to produce those every single day? How many of you guys have heard me say that we don't want to have huge runs in the market because A, that's your ego, and B, it's hard to reproduce? Well, why is this strategy different? Well, because when we trade divergence, I have the ability to take an entry here with super high degree of accuracy. My stop loss literally goes right here, or even sometimes right here. I literally put it there. And so what we're able to do with this system is that we can then go for 3R multiples. That's a 3-to-1 right here or more. And we're literally taking this leg out of the market, but it's not a big move in the market. And so we're able to capture large runs every day without having to expect the market to give us a huge amount of movement every day. The hardest part about large R multiples, like if you're trading on a 1 minute chart or a 5 minute chart or a 15-minute chart, if you want 2 to 1, 3 to 1, 4 to 1 trades, you're really expecting the market to give you huge movement every day. And the problem with that is that it doesn't, and traders can't reproduce that. With this system, we don't need a huge amount of movement because the accuracy in the signal is so powerful and the context of the stop size is so specific that we can literally capture huge R multiples, and you don't even need to be in the market for very long periods of time. This is the difference between the system and every other strategy. And I'm here to tell you that the real big gem is hidden divergence. How many of you guys have heard of hidden divergence before? The reason why it's called hidden divergence is because it's hidden. It's very hard to see. And a lot of traders don't know that even hidden divergence exists. Some of you are saying yes because I've just showed it to you. But for somebody that's never heard of divergence before, I can promise you that it's not something that you learn because the market it's hidden, and I'm going to show you how to see it. Okay, so when we detect divergence, we are able to detect reversals early, which is critical. We're able to take continuation trades. That's what we're going to use divergence for, continuation. We're going to be able to see when momentum is changing hands. And if you want to use order flow, you can. I personally use RSI. It's my favorite. The way that RSI works with Renko bars is unprecedented, and I'm going to share that with you in the ebook. But I'm here to tell you that this is a real edge, guys. There's something cooking here that is going to be a game changer for you guys. Okay, and so let's talk about automating divergence. So it fully automates everything except for the entry. So it'll plot the software, it'll plot the lines, it'll plot the signals, it'll tell you when there's potential divergence, it'll tell you when there's confirmed divergence. It'll do everything for you. And why is this important? Well, the way that we trade this software is using brackets. So we're going to use what we call TMS. Inside of Tickblaze, there's a tool that allows us to build our entry, our stop loss, okay? And then we can pre-populate our T1, T2, T3, okay? And then we can have an automatic break-even function that pre-populates the trade, okay? Pre-populates the trade. And the point of this is that when you're trading divergence, we are scalping and day trading with little teeny stops and big targets. And in order to capture that, you cannot be screwing around with moving your entries and moving your stops. And so everything is going to be pre-programmed. We're going to go in and I'm going to give you all my bracket settings. I will give you the bracket settings for everything. Let me see. I will give you the bracket settings for everything. I will show you how to set it up. I will give you my exact settings. And when you enter, you don't have to do anything except for press the buy or sell button. And the platform does everything. Okay. That's been the whole secret. And everybody that's watched me trade knows I rely on that heavily. We do not want to be screwing around with orders. That's the beauty of Tickblaze, is that we can see the bracket in advance, and hopefully maybe we'll get a trade today in the demo. Who knows? We may be able to do that. Okay, so when you build divergence, most people, when you buy a divergence tool, it doesn't do this. I mean, nothing in the industry I've ever seen does what our divergence does. On top of that, we've built an engine. So the difference is the divergence engine. And what that engine is, okay, is it allows us to populate. We've used RSI, MACD, MFI. Why do we use these three? Well, the RSI is hands down one of the mostly used oscillators in the world, but it specifically works incredible with momentum in divergence. Like if you put it on a Renko bar, there's a proprietary way that RSI moves with volatility-based bars. If you use range or Renko, the RSI is the best for this. If you use volume candles or tick charts, MFI, I don't know if you guys know this, but NMFI is the RSI on steroids because it's using volume. So I don't use the MFI on Renko bars, but if I want to use other bars, I will always use the MFI. So there's a reason for everything. Then we also have the MACD. Now, I'm not a big MACD guy, but everybody in the industry loves MACD. So we added in there just to help everybody enjoy what they want to use. But personally, I've never used it. It's there if you want to play with it. This is a custom oscillator that we've built over the years. We got a lot of traders that use it. So if you want to use the VM lean, you can. It's just because it's a tool that we've given to thousands of traders. So a lot of traders use it. And we added delta divergence. How many of you guys would think that order flow delta is pretty amazing if you could use divergence for that? Divergence on order flow is a pretty powerful thing. So you can use both of it. Now, for me, I do everything on the RSI. Why? Because I have developed what we call the trifecta system. It's what I've been trading. It's what I teach all my traders. And the cool part is that it just makes a shit load of money. We don't do stochastics. It's not really designed for custom Renko bars. Stochastics are not really good for RSI, or excuse me, for Renkos or range. It's really good for other types of bars, but not really good for those volatility bars. Yeah. Now, let's go into this. We have it so that you can use, this is cumulative delta. So when the delta, these are up and down delta candles. So when you want to use order flow delta, you can. Like I said, you can use it on other bars if you choose, tick bars, range bars, Renko bars, but you can use cumulative delta. It's really up to you. It just depends on how you want to trade. Okay. And so let's go into, yeah, so really the difference is you have momentum oscillators and then you have order flow. And there's nothing better. You get the best of both. And it's built into one tool. We could have built an RSI divergence software or a MACD divergence software, or order flow divergence software, and sold it as separate products. Instead, you're technically getting, let's just do the math here. RSI is 1, MACD 2, MFI is 3, VM lean is 4, 5 in 1. You're getting 5 in 1 systems for divergence. And instead of creating 5 different tools and selling them 5 different times over, what we did was we just put it all into one tool. You get it all for the price of one, right? How many of you guys think that that's a better idea? Everybody saves money. We code it all into one tool, and basically it's just better. I mean, it's just more convenient and it's easier. That way you're not having to use a whole bunch of different tools to get the job done. Now, when we build an algo, Rain, that'll also go in the algo. Yes. When we put the algo out, it'll all be included in the algo too. Yeah. So let's start with regular divergence. So this is in the ebook. Okay. This one here is a situation of regular divergence. Now, what's really cool about the ebook is it's going to teach you a lot. You can read it, you can study it. I really think it's better than reading the tabloids. But at the end of the day, regular divergence is when the market is going down, okay, but the oscillator, okay, is going up. So here, give me an example. So price is going down, oscillator is going up. Now, normally you want the market to do this, right? So you catch the reversal, and that's called regular divergence. Well, everybody's doing this as a reversal trader. This is what it looks like in a trend trade. Now, you're going to hear me say something that all pullbacks are not created equal. So let me explain a few things. If you're a trend trader and you're trading an EMA, okay, everybody hopes the pullback works. Tell me a yes that makes sense. If you're a pullback trader and you put a buy side and you don't know what's coming next, but you hope that the EMA holds. Yeah, you're like, I really hope that this pullback holds because I just took the trade. You got 1 pullback, 2 pullback, 3 pullback, but as a trader, they're not equal. And what I would encourage you to start thinking like is a data-driven trader. Data, okay, can be used to tell me which pullback makes more sense. And so when you see a market with all these pullbacks, you want to identify divergence. And so you'll see here, price went down, the oscillator went up. That would have been a killer trade. In this situation, stop loss goes here, here, that's a 2-to-1 trade. 2-to-1 with a tiny little move in the market. That's the key. And regular divergence is not meant for reversal trading. Regular divergence is meant for trend trading. Does this make sense? Give me a yes if that makes sense to you. You're going to hear me that we are only using divergence in trend trading scenarios. Even when the market's not trending, you can have momentum given scenarios. The market can give you oscillating swings. Let me give you an example. Let's say the oscillating swings goes down and then it goes up and then it goes down. You may not be in a trending day, but you may have movement where you can trade the divergence in those legs. And we will only trade the divergence with direction. Now, here's an example of bearish divergence. Same thing. Market's going down, pull back here, pull back here, pull back here, pull back here. But this one, market made a higher high, divergence here, made a lower high, regular divergence. The key about this is the entry goes right here before the divergence happens. Stop loss goes right here. And then we would trail that whole leg. The way that our brackets are set up, we would take 1, 2, 3, and we would have trailed the stop right here. You would have captured the entire move. How many of you guys have been in my boot camps and every time we take the signal, we squeeze the whole leg out of the market? How many of you guys have seen me do that? Like we get the whole leg. We're not getting little bits of it. We get the whole move. That's the whole point of what I've built is that when the signal kicks in, we have built a trade management method that allows us to capture the whole leg. It's an amazing way to trade because you capture a lot more money, you make a lot more revenue, and we're not peeling out for little teeny quick base hits. Our base hit is big R multiples because we're trading with such tight stops, and you're going to love it. You're going to love it. Now, what we're going to do is we're going to talk about the other side of the divergence equation. Remember at the beginning, I told you we have this, we have roadmap. So what we've done is I've just showed you an example of this one here and this one here. However, we're going to talk about this. Okay, why? Because it's what nobody ever learns. Nobody ever learns this stuff. I'm here to tell you that hidden divergence is hands down the most powerful force in the market that I've ever seen. It's more powerful than order flow. It's more powerful than higher time frame levels. It's more powerful, and I'll tell you why. Okay. How many of you guys agree that an oscillator, okay, an oscillator down here, okay, the way that oscillators are designed, right? They're supposed to track price, right? If price goes up, the oscillator is supposed to go up. If price goes down, the oscillator is supposed to go down. Are we in agreement? That's how most people would assume, right? If you have a stochastics, an RSI, if you have a MACD, oscillators follow price. How many of you guys agree to that? Yes or no? Don't be afraid to put yes if you guys are afraid if I'm going to call you out and say you're wrong. I'm here to explain a few things, okay? In regular divergence, yes. In normal context, yes. But there's a time and place where oscillators, okay, where oscillators will do things that are an anomaly. And I'll give you an example. If you see here, price made a higher high and a higher low. Okay, do you see this? But at the same time, the oscillator made a lower low. And the question should be is how did this low go higher, but the oscillator went lower? Well, I'm here to tell you that this is where the coil happens. How many of you guys have heard of impulse legs? Correction, impulse. Correction, impulse, right? Or let's say you come down and you have a downtrend, right? You come in, you get a pullback, and then you get an impulse. Hidden divergence always happens at the beginning of an impulse push. So one of the things that I love about a hidden divergence is it's the reason why the market gives you explosive moves. The hidden transition between price and momentum kick in, and it gives you explosive moves. And it almost always happens right after an EMA crossover or a transition, or if I'm trading up, push up, and then all of a sudden it transitions. Right after a transition, I get hidden divergence, and it just kicks in, boom, and it'll give you an explosion. Or price will be coming down, And then all of a sudden you'll get hidden divergence, and then bam, it just explodes. That is the power of what we're doing here. Now, the hard part is drawing all this stuff manually. When you're trying to watch the market and draw a line and pay attention to this and move the scale and do that on a couple instruments, by the time you say, oh, there's hidden divergence, the market's already up here, you've basically missed the entire move and it's impossible to catch it in real time. And that's why we built the software. We built the software to do everything that you need it to do. So all you need to do is be responsible for building your bracket and hitting the buy or the sell button. And if you have hidden bearish divergence, it's the same thing. You're going to see an explosion come out of these moves. Now watch this. Here's a great example of you've got a downtrend. Okay. Every one of these pullbacks, okay, is a different data point. And when you look at the oscillator, every single one of these pullbacks, look at this, higher high, lower high, regular divergence. Okay. Take a look at this. These two, no divergence. This one, lower high, higher high. How can that be, you say? How can the market give me a lower high in price, but the oscillator went higher? Well, it's because there's hidden divergence, and the entry goes here, the stop loss goes here, and you get 3R multiples out of that little push. That's where you get massive stats. I'm here to tell you that I'm trading at over a 75% hit rate, sometimes 80%, with a 2-to-1 or 3-to-1 R multiple. The profit factor on that is game changing, life changing. Like if a prop firm sees you do that, right? If the prop firm sees you do this and they watch you trade, I'm telling you right now, you will be scaled. You will be scaled. Like it's indefinite. You will pass all your evals. You will collect so many payouts and you will make a whackload of money because you are going to trade a signal system that you can take stop outs. How many of you guys kind of afraid of taking price stops? Like, be honest with me. How many of you guys are afraid of taking stops? Or sometimes you get nervous or you're like, it bothers you. Be honest with me. You gets annoyed. Just be straight. Like, what does a stop loss do to you? Does it, pardon my French, fuck up your mental attitude? Like, does it screw with your emotions? Like, for me, when I take a stop loss, it used to screw me up drastically. And everybody says, oh yeah, take it in the chin. And yeah, it's the way the market goes. And oh yeah, we'll get it next time, Tommy. Like, come on. Nobody freaking wants to take a stop out. And better yet, most strategies, most traders are trading with less than 1-to-1 R multiples, which means you need to have a high win rate. And most people can't consistently get a high win rate. And then what happens is they just never make any money. What if I could give you a way to, at bare minimum, your lowest target is 1-to-1. Your average target is 2-to-1. And your normal bigger targets are 3 and 4-to-1 trades as a scalper. Like, that is crazy. And I'm here to tell you that you only need a 50% win rate to break even here. Right now, like I'm doing 80% on this. That's like, you guys can do the math. Go to AI and say, hey, what's the profit factor of a 2-to-1 R multiple on 80%? Yeah, and Patrick says, I have a 92% win rate on my strategies, but it doesn't work because one stock blows it up. Exactly. I'm here to give you the Pandora's box right now. I'm here to share with you that you will never fear stop losses. As long as I can teach you to re-enter quickly, you'll never, ever have a problem. Now, here's some examples of the system just on Delta. So here's an example of the signal here. And here's an example of just examples of it, how it looks on cumulative delta. I just want to show you the cumulative delta stuff. And then for me, this is the way it looks for me. Like, and that's the VM lean. So you'll see here that this is the VM lean tool. And the VM lean can be very powerful on the way in which we do this. I'm going to actually check that because I've never used the VM lean. I'm going to see how it looks. I'm not sure if that's the histogram or that's the BBs, but I'm going to do some testing on that and let you know how I find the VM lean to the RSI. I've been kind of custom to the RSI. But you can see here the difference with divergence on different types of oscillators. It's really, really clean. Yeah, RSI is mine. Yeah, but I have never tried the VM lean. I'm just telling you, I'm going to test it. I'll let you guys know how I find. Like I said, it's all included, but I've never traded it. But I'm telling you, like, I like the cleanness of that. Like, if you look at down here, it's really clean. Like, the legs are clean, the movements are clean. So I'll do some testing and I'll give you guys some feedback. My success has been on the RSI, but I didn't know they actually built this in other than today. So I think it's great. But either way, I'm going to share that with you. And here's a great example of how it looks on like time charts. I personally can't do this. I would never trade divergence myself on a time chart. Some traders love time charts. It's not the way I trade it. It's not the way I built the ebook. It's not the way I do things. Um, yeah, I do this. This is me. This is my bread and butter. Right here, this is the way I trade. And the way that we trade the signals, like we take the entry right here, right there, and the stop loss goes right here. And we'd be out for like our main bracket would be here. And then depending on how you trail, I would have been trailed out right here. Here, this is the entry. This is basically the stop loss. And I would have taken that entire leg. My trail would have gone to right there. Okay. And so here's some trades of me trading it before we built the software. So the problem is that I used to do this manually. And it was difficult. It was so difficult for me to draw everything and it was just hard. And here is me just drawing my divergence and just trying to do it all manually until I got so fed up with trying to do this that it's just hard. Like it's just really, really hard. And so I was trading this stuff and trading it and doing everything right. But I couldn't draw on the charts. Like to me, it was difficult. And so then I did this. I got the software, I started building it, and I fine-tuned the axe. I said, okay, how do we get in with very little heat? Like you can see here, I enter right here on the trade, like clean entries, profit, you scale out the entire legs. And what I like to teach traders is how to pick the right market. So I'll teach them how to use correlation. I'll say, okay, you can use the right market. I'll always look at a higher time frame chart just to make sure I'm trading in the right direction. And I would not trade the shorts because the higher time frame's in an uptrend, so I'll just trade the higher time frame and the smaller time frame alignment. And so here's a great example. Like this was my trading day. This was when I did 25 grand that day in the morning. That was a great day. How many of you guys were with me when I traded that day? Just type a yes when you guys watched me trade this. How many of you guys watched me do this? You were there, Alan? Philip was there. Just what was your overall opinion? Like you guys seen me do it. Like what was your opinion? What's your opinion of this strategy? What was your opinion of how this is being traded? Money party? Like give me was it easy? Awesome at how you read yeah, okay. Anybody else? Like I don't know how everybody else proceed. Unbelievable, have to have it. Like you can we yes. Yes, you can. Type a Y in here if everybody was with me, all the people that were with me this morning in the boot camp. How many? It's utterly fantastic, Jess says. Yeah. How many of you guys, simple confidence? So how many of you guys seen me trade this morning? How many of you guys think that you can do this? You guys watched me. Like, how many of you guys feel that the rules are so easy to understand? The system's the easy part. The only thing that I think people will struggle with is like, which market do I want to trade? And I have an exact rule for that. I always trade the Russell Independent. So here's the rule. Write this down. Okay. Here's the rule. always trade the Russell by itself, crude oil by itself, gold by itself. And then if you're going to trade the ES, the NASDAQ, or the YM, it's always based on correlation. It's always based on correlation. So what we do is you can trade the Russell at any time. You don't need to have to worry about what the market's doing. You just, if the Russell's trending to the downside, short the divergence to the downside. If the Russell's trading to the upside, buy the divergence to the upside. If crude or gold are going down, you can short to the downside. If they're going, it doesn't matter. But what matters is if you're going to be a NASDAQ trader or if you're going to be an ES trader, okay, if you guys are going to be a YM trader, you cannot just, today I'm trading the NASDAQ. So let me explain something here. There is an 80%, this is golden information here, guys. If I'm going to teach you one thing in your next 20 years of your life, pay very close attention to this. For those of you that trade stock index futures, you're not a futures trader. You're technically a stock trader that is using futures as your vehicle. Let me explain something. The ES, the NASDAQ, and the YM, just because you're using futures, you are technically trading all of the stocks in that basket. And the problem with everybody is they don't realize that 80% of the NASDAQ is inside the S&P. 80% of the NASDAQ is in the S&P. In the YM, over 30 stocks in the YM composite are in the S&P. So when we're trading the ES, the NASDAQ, or the YM, you have to understand which one is stronger and which one is weaker for that day. If you do not, you're going to get hurt and it is going to be harder. How many of you guys are an NQ trader in here? Type an NQ if you're an NQ trader in here. Yes? I believe it. I have the data. So let me share something with you, okay? Moving forward after today, how many of you guys want to make a lot of money? Just type yes if you want to make a shitload of money. Okay. Okay. I promise you, I am going to do a private lesson on correlation. For everybody in here that buys the system, I am going to do a private lesson on correlation. And I promise you, you will never just be an NQ trader. What you'll do is you'll get up in the morning and you are going to ultimately have a choice to make. Some days you're going to trade the NQ if the correlation tells you to. Some days you're going to trade the YM if the correlation tells you to. The reason for this is that they are not equal and you should not just trade the NQ if I have the data that says you should be trading the S&P today. If I have the data that says you should be trading the YM today. How many of you guys would like me to teach you something that took me 10 years to master? I can teach it to you in less than 30 minutes and it'll change the outcome of how you trade stock indices for the rest of your life. I promise you, this is not some bullshit theory. This is proven information that has made me an excellent trader. And what I'm telling you right now is that if you just pick the right markets every day, this system's easy. This system's easy to reproduce. You can do this. You can have batshit crazy results. Alan, Dwayne, everybody in here, Alan, anybody in here that's still posting, and it's like Patrick, you're posting to host and panelists. Ben M, you just are posting. You haven't turned off in the chat box. You can choose post to everybody. So when you have the ability to who sees your posts, go into where you have the chat and just change it to everyone. Okay. That way you can see it. Perfect. That way everybody can see it. How many of you guys would love to make 25 grand in a morning? How many of you guys would love to make 50 grand in a morning? I'm being honest. One of the things that everybody needs to learn, and this is something that everybody, first get good, then get big. So let me explain what this means. I'm going to just do this. Okay, let's just first get good, then get big. Let me explain this. I have the data. As you know, I'm a co-founder of a prop firm. So I have, and I work with lots of prop firms. Okay. Let me explain this. I have data that shows me that 93% of traders stay in this first get good stage, which means nobody ever gets to experience the then get big stage. You want to know why? Because everybody is still struggling in the let's get good stage. When you get to the then get big stage, this is when you you right your ship. And I'm here to tell you that I can get you good in a fast period of time with this. It's hard to be able to help traders become very good traders because the difficulty level in the market is hard. For the first time in a very long period of time, I believe wholeheartedly in my soul that everybody in here can get to the then get big stage. And when you get to the then get big stage, you can have massive days because the only difference between these two stages is what? What's the difference between these two stages? Sizing. Absolutely. Sizing. You know the difference between somebody that's getting good? You're going from one contract to 10 contracts, to 20 contracts, to 50 contracts. You know, I, if I put a trade on inside of a prop firm, you could trade for a prop firm and put on massive size. If you have stats that show them, you could trade 80% with a 2R multiple. If you can do that, which I can do that, and I know you can do that, every single prop firm in the business, including mine, we will give you so much capital to trade. You could put 50 lots on the NQ and make stupid F you money. And this is the type of system that could do this. But you have to trade with big enough R multiples to produce the win rates to produce that. And up until now, I just don't believe that there's strategies out there that traders can actually do these types of things with. And here's the key. I personally believe that if everybody in here today buys this system and we go into a private group over the next couple of days, I will personally open up a new boot camp just for the people that buy this software. And we will run another private room together. And I will show everybody that it's possible. I will do it with you. I will trade it with you. I will bring my whole team and everybody can sit there and watch me do it in front of you and you guys can do it. And I'm telling you right now that in a very short period of time, you guys will be able to do this. It is not a me thing. It is an us thing. Now, this was just me trading it live. This was me yesterday. I already showed you this. This was the testimonials that everybody, wrote in. I want to just share that everybody is in here. Everybody's that's in this slide is in here today. So everybody that wrote a testimony here, just say thank you. Phil's in here, Michael's in here, Gord's in here, Divine Fortune, Samir, all of you guys are in here. Thank you. Thank you for sending in the testimonials. How many of you guys see your name in here? Type a yes if you're in here. Just put a yes in here. Oh, make sure that if you're in here, yes, Jess is here. Phil here, everyone's here. I just want to say thank you guys because a lot of times people don't believe that it's anybody can go into AI. Hey, AI, give me 10 testimonials and make it believe. I don't believe in that. This is unethical. Okay. So let's get into a demo here. Let's do this. Now, how many of you guys want to go into the software? I'm going to show you how to do this. We're going to set the brackets up. We're going to show you how to do this. Okay. Let's do this. Okay. So everybody here is going to get this desktop. Why does that matter? Because it takes a lot of time to build desktops. And look, signal just happened. Boom. We're going to get into this. Now, there's three things that I'm going to teach you. First of all, the software that you're seeing here on the chart, this is the software. The stuff on the right is just extra charts. The software's here. So what we have is we have two indicators. We have a price and we have an oscillator tool. So when we go in here, you're going to download the software. You're going to see here it says Auto Divergences here and here. Okay, these are the tools. The only difference is visuals. So if I click on here, one is on the price panel So if you don't technically need to have the oscillator panel on, some traders want more screen real estate. Some traders like to see both. I personally like to see both, but you can choose both. And you'll see here on the oscillator dropdown, you can choose between these oscillators, and you can do that, which is great. And so what I've done here is I've applied it twice. You can set all the colors. You can do all the cool stuff. If you want orange, yellow, blue, purple, white, whatever, you can do that. And I've built all the settings. So these settings are all pre-configured. So just know that, we want use penetration filter false, use true. I want to put it false. It's perfect here. So the point is that what we want is we want everything lining up between the two charts. If you want to see them here and here, okay, if you want to see them here and here, you want to see them lined up. The settings need to be exactly the same. And so instead of making mistakes or instead of everybody trying to figure things out, everything is pre-built. Now I've built the desktop. This desktop is for the ebook. Everybody that's getting the ebook and everybody that's in the classes will get this. The point of the matter is that I've got four markets. I've got the RTY, the YM, I've got the NQ, I've got the ES. And what we're doing here, give me one sec, guys. I'm just going to let the dog out here. He's just making a bunch of noise. I apologize. Thanks, guys. When you have a pet and it starts barking at a bird, you can't keep him down. So when you look at this layout, the concept is that I want you to make a lot of money, not a little bit of money, a lot of money. So the way that I normally teach this and tell traders, I'm not just here to give you an indicator today, okay? The indicator is the edge, the indicator is the way in which we enter the trades. But what I want to do is I want to show you my process, because the process is where you get to reap the opportunities of huge upside, okay? And so what we're going to do here is we are going to look at two things before we look at the indicator, okay? The first thing is correlation, okay? So correlation is up here. The reason I use correlation is for market selection. If I can trade a market, especially correlated markets, okay? Remember, the RTY is independent because all of the stocks in the RTY are not related to the other assets. So if one goes up, the others, you could have the S&P, the NASDAQ, and the YM all going up, and then the Russell could be going down. And the reason is they're not correlated assets, okay? But I want to understand, like right now, if I look at the NQ, okay, the NQ is here, the ES is here, and the YM is here. And so what I do is I know if all of the markets are trading up, okay, I will not trade the YM, and I will put a favor to the NQ over the S&P right now because it's a stronger market. And so you'll see here the trend on the NQ is pushing up. You'll see here the trend on the S&P is pushing up. Take a look at the YM. It was pushing up, but it's not going up the same way. And so I know that if I'm trading the NQ right now, it's the right market to trade. 2 days ago, okay, a couple days ago, look over here. The YM was wicked down and it gave killer shorts while the other markets were not. And that's because you should be trading the YM. Tomorrow, you might be told to trade the ES. And so we want the correlation to tell us which market is the best to trade. However, if I've got all these markets pushing strength, even though this is pushing weakness, I don't want to sell the YM, even though it's weak. So what I normally like to do is I like to say, okay, self, which market should I trade and why? And then I go over here and I say, is there a trend to back that up? I want to say, am I trading on the right side of the bigger picture? That's all I care about. Now, I'm not worrying about fancy ways of doing this. I don't need this order block or that structure. No, I just look at, am I on the right side of the EMAs? Is the trend going to that? Look at the S&P. Look at this. All day, the S&P has been strong. The NASDAQ, all day, the NASDAQ was strong, except for off the open where we were trading this morning. It was showing some weakness, but at the same time, at all times, those EMAs were still up. So what we do is we say, okay, hey, out of the NASDAQ and out of the S&P, the NASDAQ shows us, okay, based off correlated strength, that it's a stronger market to trade. And therefore, if you look at the NQ, look at the strength. Okay, look at this. Okay, we have pushing here, and the S&P, you can trade the S&P. You can definitely trade this market and this market. You just can't trade this market today to the long side. The Russell, it's on its own market, so you can trade the Russell independently. You could do the Russell whatever you want. If the Russell's going up, trade it long. If the Russell's going down, trade it short. It's independent. Look at the Russell. Killer trades. Absolutely banger trades. Look at these trades right here. Boom, boom. Every single one of those longs worked. And you do not need a strong trending market, because here's the kicker. Strong trending markets are going to give you a continuation of the market. For me, I don't care if the market did this whole leg. You want to know why? Because the way that we set the brackets up, I'm entering right here. The stop loss goes right here. My first target is at a 1-to-1 right here. My second target is at a 2-to-1 trade here. Okay. And then the rest of my trade is a runner, and I will get out here. I would have been stopped out right there. Now that's big, big trade. You understand that? And we don't need the market to give us continuations. I don't need it to go all the way up. I need it to give me a reaction off the divergence signals that matter. And so if you take a look today, when we traded short, look at how this worked here. Okay. Now I got kicked out of this leg, low ticked. That's fine. Still made 2R out of that. Look at how this leg worked out. Whenever the market doesn't wick through to the upside, boom, 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 trail stop. And the key here is the brackets. So what we do is we set the brackets. So let me give you an example here. If I want to trade the Russell, I come into the TMSs and I have it set up. I have all the brackets set up. And that's what we did in the classes with all the traders, is that we set the brackets up. We set everything up so that ultimately everything is configured in advance. You don't have to do anything. So if you see down here, I could press buy limit and I can see my bracket. I can drag the bracket. You can't do this in NinjaTrader. NinjaTrader doesn't allow you to see the brackets in advance. You can't see the stops and targets. This is only in Tickblaze. Okay. And so let's go to the S&P. Take a look at this. The S&P, I would not trade right now. It's too late in the day, guys. I don't trade, but let's take a look at the S&P. Okay. So the S&P was the strongest market all day. Now I got stopped out here. Everybody watched me get stopped out here. I took the long, but just based off the way price action was working, it was going up and going up. If I had my stop just a little bit larger, I would not have been stopped out. And technically you can do that. Like you can update the bracket a little bit to be here. Just know this, that if you increase the stop a little bit more, you just need to have a little bit further target. Nothing wrong with that. And honestly, like there's nothing wrong. Like if I wanted to trade the S&P, I'll show you this. Let's just create this bracket. Let me show you how that would work. You come in here first, you grab your risk and reward tool, and you set your risk and reward tool up first. Why do you set this up first? Because it's going to tell you how to program your TMS strategy. And then when we take the entry, all you do is drag the order down, you take this to trade, and it gives you the trade. Now let's set this up for a second, okay? If I'm going to trade on the S&P, I do not wait for the bar to close. This is what everybody else is doing. Everybody else is waiting for the bar to close. Then everybody's like, okay, divergence is confirmed. The hell with that. I am not waiting for divergence to confirm itself. As the market is trading down and it's going down, 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 our software is plotting this in real time, and it's lighter. It's going to be a different color because it's potential divergence. It's before the divergence happens. And then as the market's trading down, 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 I'm literally trailing my buy stop order down so that when the market trades through, I'm filled. And why is that important? Because here you'll see the entry. When everybody else is basically getting the flip, I'm already halfway to my target. and it allows me to have such tight stops. So let's go and build the bracket. So let's go here and let's build the bracket here together. So if I go in here, I'm going to enter the trade here. Right now, I had the stop loss a little tight. Let's just go back and make it here. So 12 tick stop. Okay, there it is. So technically, okay, if I'm going to set this up the way that I'm showing you guys, what we'll do for all of these trades is the first target. Let's go here to this. T1, if I'm on 12 ticks, the first target is going to be a 1-to-1 R multiple. Always. Your first target is always 1-to-1. And you say, Sean, but before you would always tell you 0.5. Yeah, but that's not this system. This system is designed to give you massive R multiple trades because we're trading with super tight stops. Super tight stops. Okay. And so what we'll do is we'll do our T1 is 1-to-1. I'm always going to go 25% out on my first target. Then you could do 1.5 or 2-to-1. You can do that too. You can do 1.5 or 2-to-1. Let's just do 2-to-1. Okay. And you can do here at 25%. And then you can go to 3-to-1. Okay. Here. And you could literally go to 50% of your exit. You say, well, why? Because you're better off taking most of your position exit on a bigger target. Your win rate, even if your win rate is going up and down a little bit, when you do take your targets, you're going to get bigger returns. Your one win will wipe out 2 stop losses. Does this make sense, guys? And the reason these trades are here, the reason this target is here is to help buffer any stop losses that you do take, because it's only to help de-risk you a little bit. Now you could do 30%, 30, 30, which gives you, you could do 30%, and then you could do, say, 30%, and then that gives you 60, which, put 40%, which is fine. You can do that too, right? And the only downside I see here sometimes is that, this requires a little bit of a bigger move. But if you zoom out, it's not really a big move. Like, it's not really a big move. And that's the key. Now, what we can do is you can move your stop loss to break even, okay, at a 1-to-1, or you can move your stop loss to break even at your 2-to-1 target. At any given time, you can just drag your stop up manually if you choose. There's nothing wrong with that, right? But the goal here is that if you're able to take very tight stop losses, you have the ability to capture much larger runs. Take a look at this. This one here, let's go here. So my entry would have been right here. Look, we're not trying to capture the whole leg of the market. We are trying to capture a piece of that market. And what's really cool is that even with a piece, you capture the full 3R multiple trade. You only need, like, the average out of this, like if you average this out, it's probably 2.5. So if your average R multiple is 2.5, you only need like a 35% win rate to be stupid profitable. And if I can get you over 50, 60, 70% with a 2R multiple, Jesus, like, that's life-changing. Life-changing. Now, most of the time, if you want to just work your way into bigger targets, what you can do is you can have 1-to-1, right? You can have 1.5-to-1, right? And then you could come up here and you could do 3-to-1, right? You can stack it like that. It's your choice. Or you can do 1.5 and you can go 2-to-1, just like that. Nothing wrong with that. Now, that would basically give you probably about a 1.75 average R multiple, 1.75. But I mean, even at a 1.75 R multiple, that's still amazing. Like most traders aren't getting 1.75 R on every single trade. Does that make sense, guys? How many of you guys are getting 2R multiples on every single trade right now? Not a lot. Maybe some, right? And so I'm here to share with you that that's why we're doing it like this, right? And so, like, we can do this. Let's do this 1.52, right? And let's set that up. So that will be your bracket. So let's go in here and let's go in and set the TMS now. This is the key. So we're going to set the brackets, and I'm going to give you all these, and you can do this on the NQ, the MNQ, the MES. I highly encourage you to do this on the micros. It's the same process, right? It's the same thing for you to do, and you don't have to basically worry about, it not working for you. So let's set this up. So I got a 12 tick stop, okay? And you can set your risk. If you're going to trade for a prop firm, drop this down. It doesn't need to be crazy size. If you're trading size, you're trading size. If you're not, you're not. Right? So your first target is 12 ticks. Okay. Your second target for me is going to be 18 ticks. And then the third target's going to be 24 ticks. Okay. And so I'm going to take 30% off at T1, 30% off at T2, and then I'm going to do 40% off at the third one. Why? Because I make more money out of my brackets that way. You could do 25 and 25 if you choose, 25, 25, and then here is 50. 50 here is better, right? It's way better. You make a lot more money on that, okay? And what I'll do is I will go to break even at the first target, T1 at 12 ticks. So 12 ticks, I will go to break even plus 2 ticks, right? There it is. And there it is. There's the body break method. I call this the body break method because I'm entering on the break of the body. If you choose to enter on the reversal bar, you would enter on the reversal bar. The problem with that is that you ultimately have a bigger stop. And so what we want to try to remove having too big of a stop. We don't want a big stop. The bigger the stop, the larger the target needs to be to create the multiples, and we don't want to do that. That's what we're trying to get away. We're trying to get away from having big stops, which means we need to have big runs to make these huge R multiple trades. Does this make sense, guys? Give me a yes, and I'm kind of driving with you. You guys are learning from this. So let's save this. Perfect. Exit, done, bing, bang, boom, and we're off to the races. Okay, so when we go take a trade here, right, when I take a trade on this, okay, you'll see here, the only time you'll ever get stopped out is if you see wicks here. So here's a great example. This would have been a stop out. You would have had an entry here, and then you would have got stopped out. And then you would have had to immediately enter again. This is the key. If you're going to enter trades using the body break method instead of the bar flip method, okay, just remember this could be a stop out, and then you have to re-enter right again to capture it. Because anytime you have a signal that gives you these wicks, that's an entry that failed. That's an entry that failed. Now, the divergence would not have kicked in until maybe down here. So that's good. These would not have mattered. But the point of the matter is that you will get a stop out if it doesn't give you the push on those entries. But you'll see here, I didn't have divergence. I had it here. So that was the key here. And so, but I would have had a stop out here, and I would have had to re-enter for that entire leg. I would have had a stop out here, and I would have had to re-enter for that entire leg. But the key here is that if I get stopped out, it's 1R. If I make a profit, it's 1.75R. You guys can see this. The other webinar is going to be another 5 minutes or so. We're almost at the end, Joe. Good question, yeah. But we're almost through. Now here, you'll see here, this one here would have had a stop out because you would have came up, push, and then it failed, come back down. You would have had another entry here, right? But we're at the wrong time of day to be trading. Like, we're not going to be sitting here playing with the market. This market's done. The market's done for the day. And here's how you can really visually see if you would have had any stop outs. If you go and you take a look at every single divergence here, 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 when you see the leg and there's no wicks, no stop out. No wicks, no stop out. No wicks, no stop out. That's 3 back-to-back trade. That's not a divergence there, so that's my mistake. Right here, right here. 2 trades, 3 trades, no stop out. So these 3 trades would have netted you 1.75, 1.75, that's 3.5, and that's 4.25, 5.25. That's 5 R's right here. That's great. Right? And I'm a big believer of like believing in the power of the follow through on this. Like, not all strategies I don't believe in. I don't have the conviction. I've just been in the markets long enough to know that I don't believe in the production of the outcome of the trades as much as I do with this. And there's no subjectivity with this. Like what's really cool about this type of trading, no subjectivity. There's no guessing. There's no maybe this, maybe that, or no, it's just every single day I do everything the exact same way because it's exactly mechanical. And if you take a look at the Russell right now, like the Russell, it's given potential. You see how the divergence is lighter color? And when it goes confirm, it's going to go bright. And so here's a great example of how I would trade this. I'm going to go in and we're going to set the bracket. I'm going to show you how the risk reward works. Here's the entry. And here's the stop. So 16 tick stop on that. Let's just go into that. So 16 ticks. And the only reason I had a 10 tick stop is just to give a little bit tighter stop loss. But 10 ticks, I can do 16 ticks. So 16 would be here, 30%. Okay. Or 25. You could do 25%. Right. And then you can do here would be 16 and distance for the second target is 1.5. So what's that? 16 times 1.5 is 24 ticks, right? So 24 ticks here. And then ultimately I would do like 25% out on this. And then this would be 50%. Okay. And then that would be, let's do 2 to 1. So 16 times 2 is 32. So my target would be 32. And I take 50, and my stop loss goes to break even at 16 ticks, plus 2 ticks on the slippage, and there it is. Save it as my body break, and that's the same for both. YM and the RTY have the exact same brackets. Okay? And so here's the kicker, right? Like if you're going to enter this trade, your entry is literally right there. Okay? You put your buy stop here, and that's where you enter the trade. That's how you enter these signals, and you get the push through. And if the market gives you a big push, that's how you enter these trades. And you know, you can see that my bracket is in alignment with my risk and reward planning tool. Does this make sense? And that's how you do the body break method. The body break method is ultimately just a better way of getting into a Renko. That's why you can't do this on other bars. Okay. It's just a better way of getting in. Right. And the reason I use bigger targets is I just absolutely believe, and mathematically, I'm stacking my position size on the bigger exit. Because if I'm going to get the follow through, I'm going to make a lot more money on those targets. And it just gives me a lot more R multiples on the trade. This makes sense? Everybody with me? I'm here to tell you guys this has changed my trading. It's changed everybody's trading that I've ever seen. That I mean, everybody that I've been in the boot camp has been watching me trade this live. And personally, everybody's been waiting. How many of you guys have been waiting for this? Just type a Y that you've been waiting for this. You know, you've been waiting for this day because we've been trying to push this out. This is like everybody's been waiting for this. This is exciting. Yeah, this is hands down one of the best, right? Now, like I said, I don't encourage any trading right now. The markets are quiet, markets are tired, right? The day is done, right? But we're still very much in a strong uptrend. There's still very much room to move. There's still very much, you know, the potential of every single divergence working. But like I said, this is a demo, right? Here to demo. I would think the better trading is going to be in the morning, as you know. But hey, you never know, right? Anything can happen if you just believe. Right. So yeah, so let's go into pricing, guys. Let's go into the rest of the presentation here and we will set this up. Perfect. Let's go into pricing. We'll go over this. We are going to give away a free license. The boot camps are over, Frank. The boot camps are over. We just finished them. They were paid events. People paid their be there. We did a webinar last week on it, and everybody was given a chance to buy it. If you didn't buy it, you didn't get it, right? And but there are recordings. I think you can purchase the recordings. But I'm going to do another one because if everybody here buys the system today, if I get X number, if I get a lot of people buying, then I'm going to open up another boot camp just for everybody that bought it. And that way you guys don't have to worry about paying for something. You guys get the software, right? Makes sense? So let's do a free license. How many of you guys would like a free license? You got to basically put a link in here. So can Jeffrey or Pete or anybody here put a link in here for the license?
Yep, coming up.
I'm going to move this over here. Great. Okay, we're going to get the link in
One
here.
sec, one sec.
So give us a sec, guys. I'm going to give you guys a link here.
There you go.
Great. So this link, please fill out that link right now, and we will pick a winner here. Is there any questions while we're doing this? Make sure that you guys grab that link. We just posted in the chat box. Okay, is there any questions so far? Is the link in the chat? Yeah, the link is in the chat. The chat. You got to see the chat. Yeah, the Zoom chat. How did I discover this system, Tom? I've been trading for a very, very long period of time, and I just always studied divergence. I've always studied oscillator and price anomalies. I've just been a student of the market and just building systems and just watching Renko bars and just watching how it works. And yeah, I'm a systems architect. That's my skill set. You know, some people are meant to be a lawyer, some people are meant to be a doctor. I'm meant to be a trader and build systems. Like that's what I do and run companies. Yeah. Yeah, this is not like any other strategy. This is not the same as any other system. Like I said, this is not like you get away from thinking about any of the, this has nothing to do with anything else. Like there's no correlation, there's no overlap, there's nothing. And there's nothing. Like it's not the same. Mhm. Yeah, they don't nothing complements anything. The divergence is completely standalone. Like this is an independent trading system that is meant to be traded on its own. It is meant to be completely mechanical. Do not try to do this with a bunch of other things. Like you are not supposed to mix and match and fire and this. This is meant to completely scale massive capital with small stops and big targets with big size if you are willing to do it. Because like I said, this is absolutely, absolutely independent of anything. Yes. All right. So let's pick a winner here. Let's grab a winner, guys.
We have a winner. It is David Lester.
David Lester. Who's David Lester? David, you here? You got to be here to win it. Congrats, David. David, yeah, buddy. You got Lady Luck on your side. You are crushing. Woo, David. Yeah, baby. Congrats, man. You know what we could do, Kathy? We could have a link for the guys and a link for the women. Let's do that. Next webinar, we're going to do two links. So that means I got to give two licenses. That's fine. We'll do a women. Yeah. The problem is it's just the male, female. I wish there was a lot more female traders out there, Kathy. If you got a group or if we could have a women's club, I mean, hey, I don't mind teaching. Well, we got your back. Just if you got a group of ladies and you take a look at this, guys. Just took target. Just took target. Stop set break even. Look at that. Boom, 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 boom. I ain't making this stuff up. I ain't making this stuff up. This is happening real time. You guys see it? You guys see it? I put the order in. Just hit target. Done. Seeing is believing. Yeah. Yeah, it is real impressive trading. It's absolutely impressive trading. Yeah. Absolutely. Great. Okay. So now that we've got through this, let's go through everything that comes with this system. Okay. Everything that comes with the strategy, everything that comes with the software. You're not just buying the indicator, you are also buying the whole process of everything that I've put together for this system. So that's important to understand. And we're not here to answer any questions about anything else, Jack. So this is a different discussion. Yeah. So let's get into it. So this is the software. Let's talk about what is a part of this. Okay. So this is the indicator. You get the indicator. Okay. And ultimately, this is the indicator plus all future updates. Okay. It's a one-time purchase. Detailed user documentation. So we've put together a really big training on this. But here's the key. It's not just user documentation. We have also the strategy ebook, which is independent of everything that I've done today. It's the entire process of the bars, the indicators, the strategy, the divergence, everything. You do not need to subscribe. It's a one-time purchase. All of my desktops that I've built are pre-configured. They're pre-built. So ultimately, you don't have to build anything. You just need to just plug and play. You can download it. It's good to go. And then ultimately, we can install it for you if you need help. The strategies are what I've been teaching. And what I'm going to do here, guys, is if you guys are really serious about this and if we can get everybody to purchase, basically, let me see here. Bear with me, guys. Yeah, if you guys are, give me just a second here. 1 second here. Grab it here. Yeah, and what's cool about this is that I'm going to be doing a boot camp for this, and we are going to be doing private training for all of the system and everything that comes with this. So it's normally $4,000 for all of this, and yeah, we are going to do it at a very big discount. You're saving over $3,000. So can we put the link in here, guys? Yeah, great. Now, a couple things is that everybody in here that was in the boot camps, very, very important. Okay. Okay. Everybody in here that was in the boot camps, you get an email. You also have an additional coupon. Okay. An additional coupon. Right. Let me see here. Let's go here. Yeah. A lot of people putting in questions. So just bear with me, guys. Yeah. Bear with me here. Right. So what we're going to do here is go through. Let me see here, guys. Okay. So there's a lot of people in here that were boot camp members. So you're all going to get emailed basically a free coupon here for you guys to get extra discounts for this. Okay. And you should have been given a coupon. So you should check your email if you guys qualify for that. Not everybody qualifies for the boot camp coupons. Yeah. If you were given a coupon, Pete, are you here? Can you speak to that? Are the coupons that were given just for the boot camp members? I believe they are able to be used for this, if I'm not mistaken.
For this, yes, they are. They'll
Yes,
be given out after purchase. You'll get them 15 minutes, 20 minutes after. But yeah,
I
you can do
believe they were already sent, Pete. They were already sent to all the boot camp members this morning. Ashley already did all that.
that. Yep, then yep, they're good.
Yeah. So everybody that was in the boot camp should have already been given the extra coupon because you guys paid for a bunch of events. So because you paid for those events, we gave you extra discounts on the software. Okay. And yeah. Yeah, if you bought the boot camps, if you buy the boot camp after, we don't have any other boot camps basically configured. What we're planning on doing we're going to give you a private AMA training on the software. But what we're going to do is if everybody here is buying, if we get enough traders, then what I'll do is I'll put together another training strategy session. I'll teach it to you guys. I will trade with you guys live. Like I said, I want to trade with you guys live. You know what I mean? I want to teach you guys how to make as much money as possible with this because this is a crazy, crazy profitable strategy. So, Yeah, it's you can download all of the resources inside of the members area. Absolutely. They're all put there. Yeah. So you can see here the AMA tomorrow. The AMA is tomorrow or Friday? Friday. May 29th. Is that tomorrow? Stay Thursday? God, I can't even keep up anymore. But Friday at 12 Eastern. Okay. I've only built the TMS strategies for minis because I'm trading minis, Nick. So you'll have to build them for the actual micros. Yeah, you'll have to build your own TMS strategies for the micros. But there's videos on the YouTube channels for that. Now, here's what we're gonna do, guys. I'm gonna leave this on here. Let's go in here and put a poll. I need to run a poll, guys, because we have a ton of traders in here, and I need to know if you guys are buying the software. Okay. Why? Because there's hundreds of traders in here, and I need to make sure that we get you the right links. If you're buying the system and you guys are taking advantage of everything that we've talked about and all of the strategy stuff, I need to know, and please put a yes. And if you are putting a yes, just know that we need you to make sure that you get this in the next 24 hours. And I'm going to explain something else that this is super, super important to know. As of June 1st, all of the software across the company is increasing the prices. I'm just telling you right now, as an organization, we are going in a different direction with the marketplace, the algos, the way in which our education portals are being run. Everything is changing June 1st. Like literally the entire company pricing structure is changing, algos are changing, indicators are changing. If you're planning on buying us a lot of software, if you have your eye on a few tools, and if you're planning on getting tools, this is the time to do it. Why? Everything's going to be more expensive. And that will be more expensive for the rest of our history of Tickblaze and the marketplace. And so what's going to happen is this is the last chance to really get in on these pricing. And if you're planning on buying this software, this is the last time to get it at a discounted rate and at the lower price tiers. And so please type a Y in the chat box if you're planning on buying, guys, because we need to send you the right tools, the right emails, the right coupons, everything. Everything. Okay. For those of you that are purchasing, great. You're gonna really, really, really do some damage with this. I can promise you that. Yeah, I can promise that. And you can see here the reason the market's not giving any follow through is because like it's dead. The markets are, it's the afternoon, right? Like, I mean, nobody's trading right now. The markets are done moving, right? So we got about 48%. Gordon bought, everybody bought. Great. So 48% of you guys have answered the poll, which means 50% have not. Even if it's no, or even if you're an investor, that's fine and you don't pay for software. But anybody else, please put a yes or a no, guys, because we really need to curate the audience and we really need to make sure that everything is dialed in. Yeah. Then email in, Rain. Email in if you purchase the boot camps and everything, but you can't find your coupon email, then email in and just put an attention Pete, and then he can find it for you. Yeah. Makes sense? Great. Fantastic. Great. I'm super pumped to see everybody with this, guys. Yeah. Yeah, you just found your prior emails. No problem, guys. Yep, no problem. How many of you guys enjoyed the presentation? How many of you guys enjoyed being here? How many of you guys enjoyed the boot camps with us over the last couple of days? That was great. Super, super pumped. If you guys missed the boot camps and you guys just want to put on more, then don't worry. We will do more. Oh yeah, we will do more. I got your back. Absolutely. It'll probably be added, Sharpshooter. Pete, can you just make sure that the ebooks and all the software and all the desktops and all that are added on the members area, please? This should be done already.
Everything's there that I have. The desktops are not there. I didn't get them yet.
Yeah, grab them from Jim, grab them from Ashley.
Yep.
Yeah, we'll put them in there. Yeah. They were in the boot camp. They're probably the exact same ones that were in the last boot camp. So do that. Yeah.
We got
Perfect. Great. Great. So we've got about 60% of you guys have answered, guys. Some of you have got callbacks. Jeff is going to call you guys back. Hey, Jeff, can you guys touch base on that just a little bit? Like, we're
You
just going to
bet.
give everybody a call back. Yeah.
Yep. Make sure you put your phone number in if you want to call back. Sometimes there's no phone number there. And look for a 708 area code. I'll call you back as soon as Sean is done.
Great. So for those of you, Frank says, I don't use Tickblaze. Great. So here's an opportunity. It's free. Download it. All you need to do is connect to a prop firm data feed or buy a data feed. But the platform's free. You don't got to buy it. So if you're not using Tickblaze, you can just download it off the website. And basically, our YouTube has all the training videos for the playlist. Let me show you that. So let me just grab that here. These are all the testimonials from everybody that were in our boot camp saying how awesome the strategy was. I was just blown away by it. But let's just go to Tickblaze. And no, you cannot use TradeStation. Yeah, TradeStation, no. Yeah, that's a different infrastructure. Yeah. So if you go here, if you want to see all of the connections that we support, you can go to B2B integrations. These are all the brokers we support and the B2B providers that we support and everything. So you can do all that and you can basically catch all that and check a look at that. But if you want, what you need to do is you can go to the traders page, go to traders. Sure, here we go. Yeah, go to traders and then basically click on that. You can download the platform here, download Tickblaze. And then when you get the platform, okay, you can buy data and all you got to do is connect to data. So you can just go up here, go to file, go to connections and connect to data connections. We support a bunch of different data connections. So you can get a data feed and then you can install the indicator. Yeah. Now, if you want to learn the platform, if you're brand new, I highly encourage just going to YouTube, going to our YouTube channel here and just watching the YouTube training. You can basically come down here and just watch the standard playlist. This is the manual platform for indicator and basic stuff. Yeah, so this is, you can do that. You can just watch the standard desktop and then the strategy desktops down here. But yeah, and then today's webinar will be posted here under the marketplace indicator. So like we will post the webinar here probably later today or tomorrow and you'll be able to watch that. Yeah. Yeah. Great. And you take a look, like the NASDAQ gave a push. The NASDAQ is pushing up here. Look at that. Look at the S&P. Like I said, like the NASDAQ and the S&P were the stronger markets, right? The Russell's diddling in the middle. But look, the NASDAQ gave follow through. So the NASDAQ would have given you the full target. The S&P would have given you the full target. There's the stop loss right there. Like, look at that. Like just pushed. You would have had a trade here. You would have got 1.5 there. You know, you would have had 1.5 here, 1.5 there. You would have had 2 to 1 there. Like that's great. Just crushing it. Yeah, we are building this into an algo. So like I said, in the future, it will be an algo someday. Yeah, someday. It all depends on how fast the developers code the system. Yeah, absolutely. Great. The desktops will be available today. They're putting it in the back end today, Michael. Yeah, putting it in the back end today. Yeah. Great. Type Y in the chat box that we delivered. Everybody's happy with the presentation. Everybody's good to go. I want to thank you guys for being here. Thank you guys for just always being such great traders, great customers, great people. Love having everybody around all the time. It's just a great group of traders. And yeah, looking forward to how many trades can you take a day? Lots. Around there's lots. I mean, across the 3 markets, you're taking a decent amount. Yeah. You're not going to be without trades. I can promise you that. Yeah. Great. So happy trading, everybody. Watch for Jeff's callbacks. He's going to be calling you back today right after the presentation. And everybody that purchased, we have a lot of you guys. Watch your emails for any purchase links and replays. You have 24 hours. Like you got to do it tonight. Like it's today only. So make sure that you get the software by today or you're not going to get the discounts. And you definitely want, and here's the thing, like this is for this system. But like I said, if you're planning on buying anything else in the marketplace, like let me explain this. If you're buying indicators or strategies, June 1st, everything is doubling in price, doubling. Like We will not sell an algo for less than $2,000 ever again in the history of the company. Moving forward, everything is changing, right? Indicators are going up, algos are going up. It's just everything is changing. So you guys, if you want tools, get in now before it gets more expensive, right? We're doing a price hike and it's happening fast. So you guys be here or be square kind of deal, right? I want to save you guys some money where it can be, right? All right, traders, have a fantastic day. I want to thank you guys for being here. God bless and happy trading. If you have any questions, let us know. We're here to help. Have a fantastic afternoon, everybody, and we'll see you on the charts.